Gold's going to be allowed to rally if the dollar is going to be weaker relative to the world. Gold could be, I truly believe and have believed that gold is the sponge for the rest of the world's wealth. So I believe that the gold silver thing still has to play out. Oh, let's buy gold and sell silver. But I think it's going to be, someone's going to get their face ripped off when this is done. And I don't know when it will be done, but I'm aware of it. I will not sell silver, right? If I buy gold, I just won't do it. It's something I would do in the past. I'm looking to buy silver when this whole complex kind of bottomed. But right now it's just basically be long oil.
Gold's recent decline to around $3,212 per ounce appears to be driven more by speculative positioning than by any genuine resolution of global tensions. The ceasefire between India and Pakistan is undoubtedly a positive development, yet historical precedent suggests such agreements are often short-lived. Similarly, diplomatic gestures between Russia and Ukraine, while ongoing, have yielded little meaningful change over the past 2 years. In the case of China, its pledge to halt fentanyl shipments may carry diplomatic weight. Still, it does little to address deeper unresolved issues such as tariffs, technological rivalry, and broader geopolitical tensions. Despite the current softness in price, gold's function as a hedge has not vanished. It has merely taken a temporary step out of the spotlight. According to senior analyst VinceLanci, the U.S. may soon reduce its pressure on gold prices, potentially opening the door for a renewed rally. At the same time, China is actively supporting higher gold prices, continuing its strategy of reducing dependence on the US dollar and increasing its gold holdings. This gradual shift points to China's longer-term ambition of developing a stronger, perhaps gold-backed, yuan. Meanwhile, silver has had a volatile journey. Its price, which had recently surged to multi-year highs, fell sharply before bouncing back following President Trump's reversal on some proposed trade tariffs. Unlike gold, silver derives over half its demand from industrial and technological sectors, making its value more sensitive to economic growth and manufacturing trends. This dual identity, part monetary metal, part industrial commodity, leaves silver in a problematic spot for Wall Street. Because of this, silver is often used as a hedge in gold trades and is frequently sold off when investors are long on gold. Yet this very dynamic could lead to a dramatic shift. As Lanci notes, silver remains undervalued and underappreciated. He believes that those currently on the wrong side of silver trades could face significant losses if sentiment changes. His strategy is to hold silver and wait for an opportune moment to accumulate more. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Gold's going to be allowed to rally if the dollar is going to be weaker relative to the world. Gold could be, I truly believe and have believed that gold is the sponge for the rest of the world's wealth. Hey, our currencies are too weak. What are you going to do about it? Well, you guys own gold, right? Fine. We'll take our foot off gold's throat and we'll let it go up. That's the U.S. talking. China, from the China perspective, is, you know what? We like gold and you're not going to put your foot on gold's throat anymore. We're going to make it go up. Right? So either the dollar is going to weaken against the world or gold is going to strengthen. And that's what China's been doing, de-dollarizing, taking their money off of a soft peg to the dollar and putting it on the gold. And that's why we've been saying for about 3 years, way ahead of the curve, or maybe just wrong, that we're moving towards a golden yuan sort of situation, which if you're a Bitcoiner makes you think that the US is going to switch to a Bitcoin type of situation, or at least Bitcoin as a tether for the dollar, for the bond market. Anyway, okay. So there's the charts. There's really not a lot to say. I mean, we can talk about gold, silver here for a second. Put silver up and put that there. Okay. Very briefly, silver is hated. Okay. Not hated. Silver is used to offset gold length. And so now everyone who's selling gold right now is buying silver. Not everyone. Okay. Some people are just selling silver, going, oh, I'm long gold. There's news. I'll just sell silver to hedge it, right? But there's every permutation is buy gold, sell silver, right? So now they're unwinding it a little bit. So you're seeing some silver be bought. Then you've got the industrial guys going, oh, oil's up, copper's up. I'll buy copper, sell silver. That's what the banks pitch all the time. They go, pure play, gold, risk off. Pure play, copper, risk on. Silver, I call silver the Goldilocks metal. But Wall Street's into specialization. What's silver? Well, it's part this, part that. Well, then let's just sell it every round we get. I know that. And if you listen to the 3-hour video, you can use the transcript to search it. I discussed that at length. They actually say it with regards to platinum. They're now selling platinum when they buy gold. That's just how it works. That's how the world works, unfortunately. So I believe that the gold silver thing still has to play out. Oh, let's buy gold, sell silver. But I think it's going to be, someone's going to get their face ripped off when this is done. And I don't know when it will be done, but I'm aware of it. I will not sell silver, right? If I buy gold, I just won't do it. It's something I would do in the past. I am looking to buy silver when this whole complex kind of bottoms. But right now, it's just basically be long oil, right? The heck with copper. It's too volatile, with too unknown. So there's those three levels that I have been looking at, right? That is the final boss of ledges for me, okay? There's no if this, then. It's happened, right? So for me, it's pretty much happened. I could say there's one little hope, no hope. Below this line, I think we go to a moving average. That's a 30-day moving average. That's a 50-day moving average. I think below this line, we go to the 50-day moving average. Doesn't have to happen tomorrow. Doesn't have to happen tonight. Doesn't have to happen the next 2 days. But I think, despite what I'm about to say about it's not over yet, I don't think you want to fade these moves. People have been positioned for them. The dip is being bought right now. That's, if you remember where I said China's physical demand was, right there. China insurers and central banks. I'm not sure where the central banks are, but let's assume that the central banks and insurers are right there. The fact that they haven't pulled back yet, because we've stopped, right? Or maybe they have pulled back. They're just putting a little bit less there, a lot less buying there. Tells you that, there's no done deal. If there were a done deal, this market would be trading 3,100, maybe 3,000. That's what I think.
VinceLanci notes that if a U.S.-China trade deal materializes, expectations for interest rate cuts could sharply diminish, from the current forecast of 3 cuts this year to possibly just 1 or none. The original reasoning behind the anticipated rate reductions was the fear of new tariffs, which now seems less likely following a truce between the two economic giants. The Federal Reserve may have gained some breathing room to assess the impact of President Donald Trump's tariff policies on the U.S. economy. A temporary pause in reciprocal levies between the U.S. and China offers a potential path to reduced global trade tensions. Under the new agreement, tariffs on Chinese goods have been scaled back to roughly 30%, while China's tariffs on U.S. exports have been lowered to 10%. Both sides have committed to maintaining these reduced rates for at least 90 days. In addition, they have agreed to establish a formal mechanism to continue negotiations on broader economic and trade issues. Following this development, traders have revised their outlook for monetary policy. Market pricing now suggests that the Federal Reserve is unlikely to cut its benchmark lending rate, currently at 4.375%, until at least September. This shift highlights how intertwined monetary policy expectations have become with geopolitical developments, particularly the ongoing tug-of-war between the U.S. and China. While the immediate threat of escalating tariffs has subsided, the long-term implications for growth and inflation remain uncertain, keeping the Fed cautious and markets on edge. Let's get back to the interview.
All right, top right-hand side, that's gold. Top left-hand side, that's the dollar. Lower left-hand side, the S&P 500. And the lower right-hand side is the VIX. Those are daily charts. Let's leave them at that for now. 10-year yields are up 6, 444. The dollar is 101.74, 132. Extremely strong. S&P 500 is 583, 167. The VIX is 1995, down 194. Gold is 32.22, down 102. Silver is 32.21, down 50. Copper is 461, up and down all night long, up 2.5 cents now. WTI very strong, up 220, 63.42. Natural gas 371, unchanged bid. Bitcoin is also volatile, but in a tight range, 104 and change. Palladium 963, down 11. Platinum 982, down 15. Gold, silver 99 and change. Soy, corn, wheat up 2%, up 1%, up 10 basis points. 1060, 445, 524 and change. Okay, and you can see the China data there. We'll talk about that some other time. But China stocks are up as well. So you could see that the pattern is consistent with the news. Okay, it's risk on, out of safe havens, number one. Number two, industrial commodities, including oil, are relieved. This is very inflationary looking. If you're trying to tie the whole thing together, since we only have a couple minutes here, tying the whole thing together, if a deal gets done, you better take your expectations of rate cuts. You're currently like 3 for the year. You better drop them down to 0 or maybe 1. I don't know. But the rate cut expectations in the market are assuming tariffs would go on. So the rate cut expectations are going to be trimmed. What that does to the market, I don't know. But if the rate cut expectations are trimmed and a deal isn't done, you could have a big Look, uncertainty, we're still in an uncertainty situation if I'm Powell. All right, to the markets themselves. Well, actually, to the news item that spurred the markets themselves. And that is, bear with me here. Okay, I think this is the most credible way to look at it. This is a statement from China publicly. China and the US will on Monday issue a joint statement reached at the two-day trade talks in Geneva over the weekend. Asked what will be the exact timing for the release of the joint statement on Monday, Li Chenggang, apologies if I'm not pronouncing that right, China's international trade negotiator and vice minister of commerce, replied with a Chinese saying that, quote, if the dish is delicious, then the timing is not a matter. You talk about our idioms. All right. No matter what the statement is released, when the statement is released, it's going to be big news and good news for the world, Li said. Chen Wai Hao. Okay. Take that statement in combination with the U.S. statement, which is essentially best sense statement is more the one that I pay attention to. You basically have the same thing. They are on the same page. They're at least coordinating their public message, and there probably is some really big news. Whether big doesn't necessarily mean good, all right, in the long run, but we're looking at the market and what it's doing right now. So if you're looking to figure out at the very, very easiest level, at the very basic grassroots level, what this is about, I mean, really grassroots level. The East wants multipolarity, the West wants fair trade. Okay? Tariffs have been something that nations have been using for years to protect their industry because they were worried about the strength of the dollar. That was a kind of a détente there, right? A balance of terror. You guys, this is us talking to the rest of the world. You guys want to use your money in transactions locally? You want a level playing field for currencies? Then drop your tariffs. Trump says, if you're not going to drop your tariffs, I'm going to bring mine up to yours. And in my meme there, that's what Best Sent is saying. Zero tariffs, go pursue your currency, have at it. You want a free playing field? Well, then we need to have a free and level playing field as well. That's the grassroots of it. The world wants to go multipolar. The US also wants to be less of a global reserve currency. The accord would be we need to weaken the dollar so the world can share the stage a little bit better. We're willing to make room, my opinion. I think the smarter people are willing to make room for China on the currency stage if everyone else would drop their tariffs. And then we'll have at it and we'll battle you in trade because I think we would win, but that's neither here nor there.
As the world's two largest economies navigate a fragile detente, global markets are recalibrating expectations around interest rates and risk assets. While short-term optimism has subdued some of the urgency for haven flows, the deeper, unresolved frictions, ranging from technological rivalries to systemic imbalances, continue to simmer beneath the surface. Gold, momentarily out of favor, still retains its relevance as a shield against monetary shifts, while silver, often overshadowed, may be poised for a breakout as market sentiment evolves. In this landscape, the interplay between policy signals, geopolitical moves, and investor psychology remains complex and volatile, suggesting that today's calm may only be temporary. Will shifting global alliances and financial strategies ultimately rekindle investor appetite for precious metals as core assets in uncertain times? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.